Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance, and on this episode, we'll be discussing the winners and losers so far from the trade war, funding college, variable annuities, and a look at the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are we, good sir?
Doing well. Enjoying, after tax season and the weather's getting nicer. I'd say it's my favorite time of the year because it's the longest time until next year's tax season.
Well, recently I was getting out with the kids to enjoy some of that good weather, and we went to Mariposa. Well, it said there was going to be light rain. No, on the way home, we got heavy hail. So it was pretty interesting, and my car is definitely not a four-wheel drive to pull on over for a little bit, but it is nice that the weather is getting better. So hopefully it'll kind of normalize here.
Yep. Yeah, it has been some interesting, volatile spring weather for sure.
Yes, sir. All right. Well, let's jump on into our first topic, the winners and losers so far from the trade war. Of course, been a hot topic in the news, headlines all over the place saying this, that, and the other thing. And we just did pass President Trump's first 100 days in office. So what are we really seeing so far? We've touched on this in our prior conversation here on the podcast. But I think, like I said, we're seeing headlines all over the place, but people, I don't want to say mislead, but maybe over panicking. What's really happening?
Yeah, I mean, for the most part, everything we've seen is based on sentiment, right? There's not a lot of hard data. We've started to trickle in just recently, so we've gotten some interesting data, though even that's been kind of non-conclusive. But most of it's just based on sentiment, what people think may happen, right? That's what they're trading on. And so you're seeing the, different areas of the market move in different directions in response. As you said, it's too early to know if these trends will continue or how this may play out. But we thought it'd be interesting to kind of take stock of, what we're seeing in the market and kind of the responses that we've seen and so far this year.
Well, let's start with the U.S. stock market. I mean, it was up early on in the year, but what have we seen since then, and how is the market looking? Stabilized?
Yeah, stock market started out strong, kind of ending, taking from the strong ending of last year. And it was up nearly 5% at its high for this year. But then, we started seeing things roll over. Obviously, that accelerated with the announcements of the tariffs. And so now, not only has the market given up its prior gains, it's down 6% for the year. Now, 6% is not necessarily a big dip by market standards, or, not even really a correction at this point, being down such a small amount for the year. And it has been showing some signs of stabilizing in the last week or so. But it is interesting that we're seeing, the U.S. equities largely taking the brunt of kind of the perceived or expected impact from the trade war.
That has been. So what does that mean as far as the foreign market?
Yeah, that's something that I think has not been talked about enough and is pretty interesting. Foreign stocks are up 12% for the year. Now, the majority of that return is because of a decrease in the value of the U.S. dollar. The value of the dollar has decreased 8% so far this year. So even if foreign stocks didn't move and it was just the currency, right, the value of foreign stocks would go up 8% because when you trade the foreign currency for U.S. currency, you'd get that premium. But still, being up 12% means the foreign stocks are up a little bit, even after taking into account the currency exchange. So, yeah, we've seen a real shift as investors maybe looking outside the U.S. And also, seeing some opportunity that if we continue to have a weaker dollar, that it should benefit global assets as opposed to U.S. assets.
Yeah, what really happens when the U.S. dollar gets a little bit weaker? I mean, because like you said, it's foreign assets aren't going to be the only thing that benefit here.
Yeah, I mean, dollar diplomacy, dollar strategy, it's kind of always been the strategy of the U.S. to have a strong dollar.
Hmm.
And partly that's because we engage in a lot of dollar diplomacy, right? Funding a lot of things throughout the world to try to keep countries kind of on our side within our orbit of influence. And it also makes the things that we buy from outside the U.S. less expensive. So if you're buying goods from Japan and the dollar is really strong, then it keeps the prices low. Or if you're, traveling to Italy, then, people come back and say, wow, and things were so reasonably priced. Well, part of that is that strong dollar policy. But then the downside is it makes what we sell to other countries more expensive because, they basically have to trade more of their currency to get the dollars to be able to buy those goods. So it hurts our exports. There's some debate over whether this is a little bit by design that we've had a strong dollar policy for so long, and maybe a little bit weaker dollar will make U.S. exports more attractive. But the downside is it actually will kind of exacerbate the effects of the tariffs, because if the dollar's down 8%, that automatically is going to make those foreign goods 8% more expensive. And then if you throw a 10% tariff on top of that, now it's a bigger increase in prices than even just the tariff effect would have on its own.
We also did touch on bonds in a previous episode, so I'm interested to know how the bond market is looking, because we talked about it having a positive start and that maybe people were moving that direction for a lower risk vehicle.
Yeah, we saw a little bit of a flight to safety. That is kind of moderated. So the kind of up and down of interest rates that we've seen so far this year seems to be kind of settling into a range, but we'll have to keep an eye on that. But in essence, bonds are benefiting from the attractive interest rate levels, at the beginning of the year, right? Coming into the year, interest rates were fairly attractive. So just the yields, just the interest available to be earned on bonds, looks pretty good, especially if you go back, the last several decades. There's been, we had those long periods of ZIRP, right? Zero interest rate policy. And then we had a period where interest rates were rising. But the problem is when interest rates go up, bond prices fall. So even though the yields were getting more attractive, the overall total return was not real attractive. But it seems like maybe we're finally settling into, that band where we can capture those higher interest rates in terms of yields, and we're not seeing interest rates moving up in a way that would cause bond prices to fall, that would offset some of those interest gains.
So we've touched on that importance of diversification. We really drive it home. Is that why we're seeing more of an influx, or I don't know if it's more of an influx, but a continual steady influx into the bond market right now to really mitigate the volatility of the stock market?
Yeah, it very well could be, and that could also be one of the reasons why we're seeing the gains in the foreign market. The U.S. market, stock market, has really led for quite a while, and it's been the place to be. If people just let those gains run, their U.S. stock holdings are going to grow at a faster pace than those other asset classes and become a bigger percentage of their portfolio. And to the extent that maybe people are rethinking that and saying, okay, maybe I need to take, this larger percentage of U.S. stock holdings and pare that down and shift that money into things like foreign stocks or bonds as a more of a safe haven. The rebalancing effect, could, reduce demand for U.S. stocks in the short term and increase demand for these other assets.
Yeah. How about real estate? We talk frequently about interest rates, real estate investment. How is the U.S. real estate market looking, and really maybe even the world real estate market for that matter?
Yeah, definitely something to keep an eye on. Real estate has really struggled since COVID, especially the office market with, work from home and all of that. But for this year so far, we've seen where, real estate investment trusts, they're up only slightly for the year. But of course, that's compared to, the US market, US stock market being down. So this is the first time in quite a while we've seen the US real estate market outperform the US stock market and from an investment standpoint. So something to keep an eye on because it may be an indication that we're seeing a bit of a turning point here.
Sure, especially I would think if there is at some point that interest rates go on a decline again. But that's just my speculation based on our conversations. Uh, we're new into May as of this recording. It's May 1st. All of these changes are relatively new. Things come at a pretty rapid pace, and it's hard to sometimes have a appropriate level of discernment. So another situation where we kind of just have to watch as things progress and take them day by day.
Yeah, yeah. We're just a month into the quote unquote trade war. I think what a lot of this captures is clearly the sentiment. In other words, the way people are feeling about it has been quite negative. What we'll have to see is how that translates through to real data. And is this one of those situations where perception becomes reality, right? Because of the way people are thinking, they're changing their behavior, and then it shows up in the hard data? Or is this a case where, maybe people are more negative than they should be? And the facts may bear out that, yeah, some of these headwinds, some of these risks are maybe not as large as what's currently priced in. We'll have to see.
Yes, sir. All right, funding college. It's college or high school graduation season is getting closer and closer. So many families will be facing that financial reality of paying for college tuition. And well, you're one of those people. What do we really want people to understand? You and I graduated college. Goodness, what is it? 20 something, almost 30 years ago. Things have changed, but not altogether. But there have been some changes.
Yeah, well, it's definitely gotten more expensive, right? Which has been an ongoing, I think, makes this topic, constantly more and more important as people have to think, okay, if you have a child that's going off to college, how are you going to, what's the best way to fund it? And so we lay out a couple, ways for people to kind of think through their options. The first, generally, if you look at, okay, from a tax standpoint, right, where are the greatest opportunities so that, use some tax savings to maybe help to reduce part of that burden. And so from a tax standpoint, the first thing is to look at the tax credits, the biggest one being the American Opportunity Tax Credit. So to claim that credit, the taxpayer, they have to pay out of pocket the first $4,000 of college expenses. Then they qualify for the full credit, which is up to a $2,500 credit against their taxes. So if your income and income filing status allows you to qualify for the credit, that should probably be the first thought is, okay, I'll pay those first dollars out of pocket so I can take advantage of this credit, which is, per child for the first 4 years of education. So over 4 years, that's potentially $10,000 in tax savings to help reduce that overall cost of the college education.
Okay. And what are some other options that people have as far as funding college? And are there any other tax breaks?
Yeah, so the next real tax advantage is using 529 college savings accounts. Now, ideally, you want to set these up early, right? Because a lot of the benefit is from the tax deferred and if used for education, tax-free growth. So, if you have money invested, if it's in a 529 plan and it's used for college, you don't ever pay taxes on that growth, which is a great advantage. Whereas if you have it in other types of accounts, you may be paying taxes on the interest or dividends or gains that you have. In addition, some states offer credits for those that make contributions to a 529 plan. So, another tax benefit you can get for using the 529 plan as a vehicle, even if it's kind of a pass-through vehicle. You put the money in, you take the tax credit, then you take the money out to pay for expenses. It can help to lower that state tax bill if you're in a state where there is a benefit.
Yeah. Well, what about any retirement plans? We've talked about different retirement plans in the past, and being able to withdraw. Are there any out there that do help with funding college?
Yeah, a lot of people don't realize that. Typically retirement plans have an early withdrawal penalty, but paying for higher education for yourself or your dependents is one of the exceptions to that rule. So a Roth IRA, because money is put in after tax, if those contributions are withdrawn and used for college education, then there's no tax liability because it was after tax money that was put in, and there's no penalty for an early withdrawal. So, that can be a place to weigh the pros and cons of using that for education versus retirement. Of course, should be a part of the analysis, but it may be a place that people can go kind of more tax efficiently to be able to fund education.
Yeah. All right, let's jump into variable annuities. What are variable annuities? I don't remember the last time we've talked about them here on the podcast, so maybe a brief rundown would be helpful.
Yeah, variable annuities used to be, I think, a lot more prevalent. It was really around the insurance industry, people selling annuities, which paid high commissions and but we're very kind of complicated investments. And in today's world where I think investors are more educated, they realize that maybe it doesn't make sense to pay those high costs for some of these limited benefits. But we still do see them come up every now and then. Basically a variable annuity is an insurance company investment product that allows you to invest in stocks, bonds, things like that within the sub accounts. And you can get stock market type returns less the expenses, which that's an important part is the expenses can be a big drag on the overall investment performance. And often they're sold because you get tax deferred growth, right? So if you have someone in a high tax bracket, let's say they're maxing out all of their tax deferred options like their 401k, they need to save more for retirement. If they put that into a normal investment account, they would be taxed on the dividends and interest as they go, right? If they put it into a variable annuity, they can defer the taxes until they withdraw the money in retirement, when maybe they'll be in a lower tax bracket. So that can be a benefit, but then the challenge is when you take the money out in retirement, it's taxed at the higher ordinary income rates. Right. Whereas, investing outside of a retirement account or annuity, you could potentially get the benefits of the lower qualified dividend and long-term capital gain rates, right? So often the tax deferral is sold as a benefit without looking at the long-term impact of, what may be the drawback down the road.
Yeah. What are some of the other various drawbacks that might come along with variable annuities?
Well, in addition to the typically high fees, because you have fees going to the insurance company as well as the investment companies, so that can really add up. But then there can also be surrender schedules, which is basically penalties for trying to get out of the policy. We always really try to emphasize flexibility in financial planning because, as we say, the one thing we know is things will change. We just don't know how, it can be more challenging with annuities. Because of the taxation and these high surrender schedules. So people really need to understand what they're signing up for, before purchasing a variable annuity as a part of a long-term investment plan.
Yeah. What about the tax implications around it all? What do people need to understand? It sounds like a pretty risky situation.
Yeah, well, the lack of flexibility is if you put money into a variable annuity, right? Like we said, you could have these surrender charges. So if you want to get out, you have to, pay a fee, which can be a negative. But let's say you're even through the surrender period, right? And now you're able to potentially make some changes. If you decided an annuity is not the right fit anymore and want to go to a different plan, you may have to pay taxes on all of the gains all at once to make that shift. And again, those are taxed at the higher ordinary income rate. So if you're still in a high tax bracket at that point, you can really end up kind of stuck in these contracts, because the costs are so high to get out.
What about when a situation maybe of if it's part of an inheritance?
Yes, that is another thing with annuities is most assets get a step up in basis when someone passes away and leaves it to their beneficiaries. So in essence, any tax ramifications get to start over, or any gains are wiped out. The exceptions are retirement accounts where the tax gets passed on, government savings bonds, and annuities. So a lot of times people have to look at, is that really your goal to, if you may get these tax benefits, but you'll be passing that tax burden on to your heirs. Does that make sense?
Yeah. All right. Anything else you want to add before we jump on over to the bulletin board?
Well, just as I said, these are really complex financial products. There's usually the devil's in the details. I think it's really important that people are considering it, that they get a second opinion, they talk to somebody that's knowledgeable, so make sure they really understand what they're getting into, because a lot of times people find out later there's some of these drawbacks that maybe weren't emphasized or they just weren't even aware of.
Yeah. All right. Well, we got one item pinned up there this week. What is it, Mr. Armour?
All right. Well, just kind of reflecting back on tax season, I'll tell you, this was a tough tax season at Plan Solutions. It was a combination of it being a late season with a lot of forms and things coming out late. Obviously, we had the market volatility late in tax season, which, just creates a whole nother set of issues that we have to deal with. And, at times we were short staffed with team members being out of the office, and then just all the illnesses that went around this year. I mean, I don't know about you. I think we went the first 2 months of the year where there was somebody in my household sick at every single time period, right? Whether it was some bad colds, that flu that was going around, and then of course we all got COVID. So, there's just so many things going around. It just made it really challenging. But I think we got through it okay, and I think actually there's a silver lining, to any difficult situation. I think it really gave us the opportunity to focus in on some of the areas that we can become more efficient, create better systems, and really focus on, how we can provide a high level of client service, even when, we're extra busy and dealing with some of these outside factors that are beyond our control that make things more challenging.
Yes, sir. Yes, sir. Well, Mr. Armour, anything else you'd like to add before we wrap up this edition of the Plan Solutions Incorporated podcast?
Well, I mean, we talked about funding college. I'll just say congratulations to all the graduates out there. I know that's always an exciting time, and I just love seeing, young people moving on and kind of starting to plan their career and looking at what they can do to really, contribute and give back to society.
Yes, sir. Absolutely. Well, we thank you for listening or watching the Plan Solutions Incorporated podcast. That's right. We're available on YouTube, youtube.com/@plansolutions, and of course on Apple Podcast and Spotify. So please subscribe to the podcast, leave a rating, a review, maybe a comment if you are watching on YouTube, and share with someone else, as we don't do any advertising of the podcast, and our continual growth is by word of mouth, and we appreciate you doing so. And if you want to subscribe to the Personal Financial Review, the written content we discuss, send Katie an email and get subscribed today. That's KATIE@plansolutions.com.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.